A stock market bubble has been brewing over the past few years as QE has been forcing the markets upward, as well as low interest rates giving free money out to banking institutions. At the same time, individuals themselves are more indebted than ever. Right now, with all this concern going on, the Fed has stated that rates will stay at 0%. This would mean that they are continuing the same policies for the foreseeable future. Let's get into that news right away. U.S. stocks ended about 2% higher on Wednesday as the markets extended gains on the FOMC minutes and recovered from Tuesday's sell-off. I had just done a video talking about how the market began to fall. Why is this concern? Because they're worried about the Fed increasing interest rates. Well, there's no need to worry for the time being because the Federal Reserve wants to pump up the markets for the foreseeable future. Isn't that so great? They're not worried about inflation because according to them, inflation does not factor in food and energy prices. So if we use that fictional way to calculate, there should be no cause for concern. And let's just continue on. What they're saying here, what everyone is waiting for is, will they increase the rates? Because they know as soon as they do, it's going to slow down the economy. That is something that all economists, all individuals are simply waiting for. If they do decide to increase interest rates, other countries may follow suit. And that would mean in a country like Canada, you will have mass foreclosures if they become a reasonable level. At 0% or near 0%, they are really going to give out free money. People are going to be able to afford things they could not had the interest rates be higher. At the same time, you have people taking risks because when you have these low interest rates, they're not going to put their money in the bank. They're going to choose riskier assets and they're going to go for things like the stock market to try and make some money off of their savings. That's what's happening here. People aren't going to put their money in some sort of more safe thing that's they wouldn't consider a bet, like a bank account, even though with bail-ins, we all know where that's headed. So I'll move on. I just wanted to say this out of Reuters: U.S. Fed frets over a strong dollar and global woes. So the Fed is concerned about these global woes. So am I. I'm sure you are as well. This comes out of the Fed minutes. Let's go into what they said. The Federal Reserve officials want to tie an interest rate rise to the U.S. economic progress, but the minutes of their last policy meeting show that they are struggling with how to come to grips with the dual threats of a stronger dollar and a global slowdown. My concern isn't really the U.S. dollar being strong because, of course, you're rating one currency against another, and that really is doesn't make sense to me. It should be rated against real goods. It's all in this basket of currencies as they all decline together. They're all printing money. It's quite silly, actually. But the global slowdown is something to note. When you have Europe with massive unemployment rates, and you can see this evidently in the US as well, but at least in Europe, they're willing to produce numbers that are more realistic, and it shows a global slowdown. Now, what happens if a country like China really starts to slow down? We've already seen that happening, but if it starts to really take a nosedive, it would mean very big problems for a lot of different countries, Canada, the US, and other countries that rely on China. So, of course, this is going to be a big problem. Now, the Federal Reserve wants to tie an interest rate to the U.S. economic progress. Well, unfortunately, they have no progress. That's why they have to keep it at 0%. Do you see where I'm going with that? So let's go on quickly here. This is what they said previously. Fed on target to raise interest rates in spring of 2015. That wasn't that long ago when they said they're going to have to raise the interest rates in 2015. And then as the market heated up, they actually said, perhaps we'll do it sooner than 2015. We're not going to wait for that time. We're not going to be so rigid. But here they are in most recent news saying, don't worry, markets don't sell, do not sell any of your stocks. Everything is going to be just fine. We will promise to keep those rates low. And that's exactly what's happening. So you could see, just like the IMF expectations for growth, they're always changing their mind. As long as it keeps the market happy, that's what they do. This is another thing that's going on geopolitically. We are having problems. Russia seeks sanctions tit for tat. This is out of New York Times. The Russian parliament on Wednesday took the first major step to authorize the Kremlin to seize foreign assets and use them to compensate individuals and businesses being hurt by Western sanctions over the Ukraine crisis. This is actually really big news when you think about what's happening here. They are really having these geopolitical tensions that are taking place. What will come of this is something to be seen. This could mean a very big sort of hate and a feud between the two countries. It's already looking very bad, and especially you're watching Russia and China partnering up on everything, and that's pulling them further away from the West. So something to look at. This is another thing that I have an issue with. Berners-Lee, computers are getting smarter. We're not. The web inventor said talking about the future of farming, work, and computing. I won't get into the article. That's out of the Telegraph here. But what I wanted to mention was that jobs are being displaced. And this is a big problem that we're seeing right now. As we move into a slowdown, generally, if you look historically, something that I'm a big fan of, look at all the history and then we can predict the future. But what I've noted about history is that the economic progress that comes afterwards is what gets us out of a recession. But unfortunately, we have less reason to have faith in an economic recovery because of different reasons. We have automation stealing a lot of the jobs, and then you have outsourcing. Now, I'll get into that outsourcing right here. This is outsourcer-in-chief Obama of General Motors. This is out of Forbes saying that GM has the other BRICS covered as well. We are increasingly well positioned in Russia, Brazil, and India with $1 billion investment in Russia to turn out 250,000 vehicles in 2015. GM also touts an almost $3 billion of investment in Brazil. And they also go into other things. What I wanted to note, in fact, is that GM also has the plants in China. Now, where did they get the money for this? Of course, that's the U.S. taxpayer. If you are a U.S. taxpayer, you funded the offshoring of jobs that may have in fact stolen your job and has now been shipped overseas to use the low wage of China and Brazil, third world nations, developing nations, and they're able to use their economies to basically to then sell you those cars back in your own economy. It's actually quite sad the way this is working. This is from my book, talking about the manufacturing jobs being sent overseas where companies can hire cheap labor and run almost all of their business operations, something that they've been doing now for quite some time. And I use one example, GE moving its X-ray unit to China in order to increase profits, and 3M doing the same thing. China's labor costs are so low, it actually makes sense to have them things built there and then shipped back. That's how much cheaper it is because they don't have regulations. They don't have things like Obamacare and all of this sort of thing that slowed down the economy. They can build it offshore, use taxpayer money to funnel all their operations over there, never pay their taxes in the US, and they have all the profits that they ever wanted to. It's a scheme that has been set up and allowed because of the politicians here working with directly in collusion with the corporations and politicians together. And this is something that is a crime. It is a criminal act that is taking place. I wanted to say that the Money GPS is really expanding, and that is because of you, because of all the shares that you do, all the comments. I comment back to you because I appreciate every single one of you. It is very, very difficult for me to get back to you, but I do so. I try very, very hard to do that. I appreciate all of this. We are now at over 7,000 subscribers and growing, over 1.5 million views. Thank you to each and every one of you. Please continue on with the sharing. Thank you to all of those who have made an interest in the consultations that I do. Please email me at david@themoneygps.com if you're interested in that. And of course, don't forget to become an insider. It's all free. It's all good intel, and that is at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.